Viper 2008 is a strategy developed in 2008, and it's not a strategy I've traded in recent years that we started looking at the end of last year. And here are the results with one extra rule that requires the range to be above a certain threshold for longs and another threshold for shorts. And so let's just look at the average range, and here is the equity curve back to 2007 with this setup. No slippage in commission, but 81.39 average trade profit, 73.20 drawdown, 88.710 total net profit. 51% of the trades are profitable. This trades multiple times a day. I know many of my strategies are low frequency. They don't trade every day. They may not trade every week. This satisfies many to trade more frequently, and you have a lot of trades here. 1,090 trades is a lot of trades for a short-term day trade, for a short-term trading system. So it may not trade every day, especially with the filter. I'm going to show you the results without the filter, and we're also going to look at recent results. Since you can see the average trade profit is much higher in the current market environment. It's around $100. It's a little over $100 average trade profit over the last 12 months. So if you add 100 times 505, you get 50,500. So the average trade profit is greater than $100 average trade profit. It is greater than $200 average trade profit in 2021 alone, the first 3 months. And we're on March the 16th, 2021. Let's look at the results. Let's see what the drawdown would be over the last 12 months. So I set the date 14 months back to get, it needs about 2 months of data. So the first trade date is March the 19th, so it doesn't quite, it's 3 days short of a full 12 months, and so that's why the results are 51,000 in the previous screenshot of the last 12 months, and you only see 5460 here. Max drawdown 5380, average trade profit 102. Here is the equity curve, doing great in 2021. Let's look at this without the volatility filter. Let's look at it in its original format from 2008. So without that volatility filter, you get about 200 more trades. Total net profit is about the same. Your drawdown is a little higher. Average trade profit is a little lower. Here's the equity curve. So still a really good system for this market environment. And so it's a very active, wide-ranging market environment. It uses a stop loss. It uses a profit target. You can see that the largest winning trade is 800, so it uses $800 profit target. Largest losing trade is 600, so it uses a $600 stop loss. And that is Viper 2008. Want to look at it back to 2007. So we saw the updated version with the volatility filter. This is the original version without the volatility filter. 46.87 average trade profit, 12.915 drawdown, 108.320, and you see multiple trades. Here is the equity curve, and it does well since November 19. There was a sideways period here. Did really well from this point till about 2016, January 2016, and then kind of a sideways period until the end of 2019, and then since the end of 2019, it's gone up in the equity curve. That's the original setup. Here it is in 2021 with the volatility filter added back. You see the improvement, making sure the ranges are above a certain threshold before it takes trades, improves the performance of this strategy. So I am going to add slippage and commission to this and put it in the portfolio calculator.